Hello everybody, welcome to Monday Market Must Knows. My name is Merlin Rothfeld and I've got three important things that you need to pay attention to for this trading week. We'll start things off with GDP, that's gross domestic product. That's all the value of goods and services that Americans produce. Now, it's important because you can see on this graph, we have a contraction of about 5%. That's that blue line that drops down below that zero line. Why is that important? Because it means that the gross domestic product is contracting. We are declining. We're not growing. Now, it doesn't look so bad when you compare it to 2009, which was even lower, going below 6%. But we have a number coming out this week, and I want you to see what happened with the preliminary GDP numbers that came out on August 27th of this year. It showed a negative 31.7% contraction, much worse than that 5% we saw in Q1. So what it's telling us is the forecast for Q2 is a 31.7% contraction, and that would be a huge down move for our GDP numbers and potentially for our economy overall. Now, why is this so important? Because in 1974, an economist named Julius Shishkin came out with a metric to measure what a recession is. Now, of course, a lot of people have clung onto one piece of that, which is 2 consecutive quarters of declining GDP. If, in fact, on Wednesday at 8:30 in the morning East Coast time, those numbers do come out negative, that would be a sign that we are, in fact, in a recession. Of course, there's other things that we need to pay attention to, such as output, employment numbers, income, retail sales, etc. But it is important to note that we are headed towards that metric where we can officially say we are in a recession, and that will happen on Wednesday. Next thing we want to pay attention to is the federal budget, the government. Oh, yes, the efficiency on the highest levels is incredible, is it not? Well, as of Wednesday, September 30th at midnight, there needs to be a budget proposed. Now, why is this important? Because in 1921, the Budget and Accounting Act says that the president is required to submit a budget for the next fiscal year. That year starts October 1st and goes through September 30th, which conveniently ends this week. Now, there is a problem. Of course, Democrats and Republicans just don't want to agree. The bill passed the House overwhelmingly, since it's controlled by the Democrats at a 232 to 193 majority. Now, why is this a problem? Because it still has to go to the Senate, which is controlled by the Republicans. And there, we may see this bill stop. Now, of course, this could cause all sorts of problems and lead to a government shutdown. Again, that's going to be at midnight on September 30th. A government shutdown isn't necessarily a bad thing. I do want to outlay that. Why? Because back in 2018, in January and in December, we had issues with regards to budget not being delivered on time. And that led to some government shutdowns. At that time, those markets did sell off. But it also happened in 2013 where governments closed, shut down, and the markets continued to rally. So don't think that just because we have a government shutdown that it means a market crash. It just means market uncertainty, which of course will bring more volatility to the markets, and that probably will be very evident next week right around September 30th and October 1st when this budget is due. Last and final, we've got the greenback, the US dollar. This one's critical for anybody who's an active trader and even long-term investor. As you can see on this chart, going back into the March lows on the equity market, that peak that you see on this is the US dollar. Of course, this is an inverse relationship to the markets. So as the equity markets bottomed in March, this US dollar index peaked. Now you'll notice the trend, since we're such practitioners of the trend is your friend to the bend at the end, we've got this nice red line here which shows a significant downtrend from those March lows to very recent data. What's noteworthy here is that yellow box. That's about the last month and a half worth of trading. And you can see it's no longer really trending down anymore. It's actually basing and going sideways. Now that basing could lead to a market reversal or a continuation of the previous trend. So what happens is we wait for the dollar to do something, and lo and behold, the last few days have now shown that dollar gaining strength and breaking above that area of consolidation. That is a bullish sign and may mean more dollar move to the upside. Now, why is it so critical for us as a Monday market must know? Because if that dollar continues to rally, that means that the equity markets may continue to suffer. As you've seen over the past couple of weeks, the equity markets have been struggling. And dollar strength means even more struggling for the equity markets, which may be something to plan for your Monday market must knows and the week ahead. We'll see you next time.